Paul, it's good to see you.
Hi, Kelly.
By the way, are you surprised that we're seeing such calmness, I guess we call it, the last day or so with WTI? What does that tell you?
Calmness?
Calmness today. We're off the highs,
What?
Paul. The crisis is over, right?
It's been absolutely lunatic, Kelly. No, yeah, today, okay, it's settled down a bit, but obviously we came off enormous highs, and yeah, we've settled today a bit. But the problem here, Kelly, is that all of this is going to take a long time, and I'm talking weeks, to feed through oil markets. And to that extent, you know, I think the reason that the oil stocks, the oil equities are going up here is that we found a level that looks kind of fair insofar as we started this at 100, we went to 130, and now we're sort of at 115. Given that it looks like, unfortunately, we're in a quagmire situation in the Ukraine, you know, 115 feels like about the right price to sort of settle at while we work through some of the real, actual physical dramas here that we're going to have to face, just in terms of reorganizing the world oil system. I mean, this is a big deal. It's not over by a long way.
Yeah, and I guess to sort of make that point, for those who think this is nowhere near over, that would seem to suggest oil needs to keep moving higher to balance the international market. But did yesterday also give us a preview of what could happen if the headlines turn friendlier?
Exactly. I agree.
Oh, okay. Well, thank you very much. Tell me where your plays would be in the energy space right now, because people might be a little concerned about stepping into this right now with all the back and forth we're seeing.
Yeah, I think that as the market gets comfortable with the idea that, exactly as you say, we're going to hold, let's say, above 100, you know, 115 whilst the situation continues. We don't know how it's going to play out in terms of how much permanently impaired Russian capacity there is, but let's say we've lost a million and a half forever. You've seen the exit of Exxon, Shell, BP. These are all going to have an effect. Not the exit of Total, by the way, but you know, all of these things are going to have a permanent impairment effect. And if we then get to a situation where we're holding above 100, you buy all the oil stocks, because obviously they become extremely good value if we have a long-term sustained 100-type environment, which is actually possible if we see continued sustained demand from China, which I think we will. They've just raised their GDP target for the year. Continued sustained demand strength in the US. We're not seeing the penetration of EVs, whatever the administration wants to tell us. Mm-hmm. You know, we still see the popularity of regular cars and regular pickups here. And also that gasoline still isn't a very high part of people's income in terms of how much they have to spend on gasoline. I know obviously there's a tremendous amount of sticker shock,
right,
but arguably this is a sustainable price that people can actually afford, especially when you look at how much gasoline costs in Europe. And once you get all that together, suddenly the oil stocks are a great place to be. And at that case, we find numerous stocks with good assets and good managements. And I've listed them for you many times. I was just discussing Marathon Oil is an interesting one. 70% of cash flow back to shareholders, enormous buyback. At 100, they could have bought back all their stock within 2 years. No kidding. So there's numerous stocks like that.